What I'm going to tell you right now is going to be very different.
What are the worst decisions people can make with their money in 2025?
Right now, I don't have that cash. It's all fully in the market.
How do you stay sane when the market goes down?
Ideally, I just keep all that money in the investing portfolio forever.
Let's talk about crypto.
Oh, I have a 5x. I want a 10x.
How complex everything is.
People saying you should sell everything.
And you do the same for your meme coin strategy, right?
Not financial advice.
Hey guys, welcome to Silicon Valley Girl. It looks like 2025 is going to be a wild ride for everyone who is interested in investing, starting a business, anything to do with finance. So today we have a financial expert here, Humphrey, who we're going to talk to about building wealth in 2025, mistakes you can make with your money in 2025, or like general wealth building advice. Because I feel like for a lot of young people, it looks like 2025 could be a great year to start building wealth, especially when you see markets growing. It's a good place to start, right?
Yeah, exactly.
Everything's falling.
Yep.
Let's talk about that. Can we start with like a general budgeting strategy for people in 2025? How much you save, how much you invest?
I'd like to say for most people that they should try to aim to save 20% of their income if they can. If they can do more, that's great. But most people, I think the average personal savings rate in the United States is about 4%. So if you can get up to 10, 15, 20%, that gives you a lot more flexibility. And that will help you save and invest more in the long run.
When you say save, like, okay, I'm putting aside 10%, does it stay as cash or does it go into a high yield savings account? What would be the strategy there?
Yeah, I would stockpile some cash until you have at least 3 to 6 months of an emergency fund saved up. So if your monthly expenses are $2,000 a month, that's what you need to live. You should at least save $6,000 or up to $12,000. Put that away, put that aside. That's high yield. Put it in a high yield account. You don't touch that money. That's just for emergencies. And then anything else you make on top of that and you can save, then you should invest that. That's the general guideline. Yeah.
What should be the investment strategy for someone who's just starting out?
Yeah. So investment strategy super depends on the person's risk tolerance and their time horizon. So if they need the money next year, I probably wouldn't say you should invest, because let's say you need money for a wedding, right? And you know you're going to spend money on the wedding. If you invest that money and it goes down in value, you would probably feel pretty bad about it. And if you can't afford your wedding when you want to afford your wedding, that's not going to be good. Let's say your time horizon is 40 years. So you want that money to be your retirement money. Then in that case, invest all you want and you don't really have to worry too much about it. Kind of put it into the market and forget about it. For most people, so I'm going to get to what you should invest in now. For most people, I think ETFs are pretty solid, and those are just exchange traded funds. That just means you're buying one fund, and within that one fund, it encompasses, let's say, 500 other stocks within that fund. So by buying that one fund, you are buying literally 500 stocks all at once.
Do you just buy that fund, or is there a split? Like it has to be like 20% international, an ETF that tracks Bitcoin, right? We just have these. What would the strategy be there? Let's talk about long term. Let's talk about like 10 years.
So there are a lot of ETFs. You don't just buy a random ETF. You typically want to buy an S&P 500 ETF. That's the US stock market. You can balance it out with international ETFs. So the rest of the world has a ETF called, I think it's like all world minus US. So basically it's like every other stock in the world besides the United States. So you could do that. And then you could also balance it with bonds.
Investing, diversifying your portfolio should always be part of your life, regardless of how much money you have, because you're laying this foundation. Did you know that 88% of millionaires are self-made? That's right, 88%. According to Fidelity Investments, these individuals did not inherit their wealth, they built it themselves. So the road to wealth is not about how much you inherit, it's about what you can create. And guess what? 2025 is a great year to start a business. The first thing you need to do is to adopt entrepreneur's mindset, and every successful entrepreneur needs a website for their business. In 2025, I'm starting a new company helping kids eat healthy. And of course, I'm going to have a website, and I will use Hostinger for this. Hostinger is the easiest and the most cost-effective way to get your business online and start earning more today. With Hostinger's business plan, you can build up to 100 websites and have access to cutting-edge AI tools like AI Website Builder, AI Writer, AI Heat Map, and AI Logo Maker. Let's walk through it. First, you'll choose the AI Website Builder. It's It's perfect for anyone, no coding experience required. Enter your brand name, select your website type, and tell the builder a little about your business. Hostinger's AI does the rest. Watch as your website comes to life. You can easily customize your designs with a simple drag and drop editor. It's fast, easy, and professional. Need content? Use AI Writer to generate high-quality articles or blog posts in minutes. Looking for a logo? Let the AI logo maker create one that matches your brand's identity. Want to understand how visitors interact with your site? The AI heat map shows you exactly where people are clicking. Now your business is online, professional, and ready to succeed. Hostinger helps you take your idea and turn it into a real business, all for a fraction of the cost. Start your entrepreneurial journey today with Hostinger. Use the code MARINA to get a discount for the business plan. And remember that 2025 is the year of change. It's time to build your future by yourself.
What's the percentage?
Yeah, so a typical percentage, let's say you wanted a 3-fund portfolio, which is a very famous portfolio. It's a lot of people online like the 3-fund portfolio because it's very well balanced, as well as it does well in times of prosperity, but doesn't have as much downside risk. The typical split on a 3-fund portfolio is something like 50% in US stocks, 25 to 30% in international stocks, and then the rest would be bonds. But sometimes bonds for a younger investor is not risky enough. So that's something you kind of have to balance and weigh with yourself. Like if you're a riskier type of investor, you might do more in US stocks because US stocks are probably, they have the greatest potential for upside, but they could also go down too. Same thing with international stocks. Yeah.
And where does crypto, real estate, everything else fall into? Like, how do you
Yeah.
decide about those things? And like even individual stocks, because
Yeah.
Nvidia,
Yeah, I know.
that's like one of the best investments ever.
Yeah, so I think there's this. So we'll talk about how to build wealth because what I just kind of laid out for you in terms of the 3-fund portfolio is a very safe way to compound your wealth. But if you want to build wealth faster, typically you need to take a little more risk, and the more risk could involve individual stocks. It could involve you getting into real estate. It could be that you buy some crypto. But for the general person who doesn't really want to spend too much time investing, the portfolio I laid out earlier is perfect. You might want to add 5% in alternatives like crypto or real estate. You could do that.
But then, so like, because I'm thinking about myself, like what number do you reach when you start thinking about something alternative? Like, okay, let's say, I don't know, 100K invested in the stock market. Is that the time to think about other things?
Yeah, that's a tough question. I think you can always think about it, but higher numbers better for thinking about other things because the way capital works, if you get 10% on 100K, that's a lot more significant than 10% on $100. So as your numbers and your portfolio balance grows, you can maybe set aside a portion of your portfolio to take higher concentrated risks so that you could try to make more money
But you
faster.
never start with it, right? You start with,
Yeah.
ideally, you start with something that's...
Ideally, you want to get your base up to at least $100,000, and then you kind
Oh.
of, from there, maybe you take small concentrated bets on things that you believe in. I think the danger of taking big swings when your portfolio isn't at $100,000 already is that you could go to zero again, or it could be really demoralizing. Let's say you get your portfolio up to 50,000, and you spend half of it and you put it into an individual stock that goes down 80%. Then you're kind of right back where you started. Maybe you lost a few years of progress, and that can be really frustrating. So instead, what I like to see people do is get that momentum and keep that momentum going.
Just
Yeah.
invest. How often do you check your balance? And how do you do regular investing? What would be your advice? Is it like manually, or you can automate it?
You can automate it. So you can do something in your brokerage account or even your Roth IRA or 401k where you contribute a certain amount every interval. So typically every 2 weeks is good. Every month is good too, but that's called dollar cost averaging. You just want to always buy into the market. Typically people...
Is there a good day? I know for crypto, weekends are good, right?
I don't think there's ever such thing as a good day.
No?
I
Okay.
think it doesn't really matter. As long as you're consistently investing, I think that's more important.
Does it buy into like, so you tell it like every second Monday of the month you buy
Sure.
this,
Yep.
this and that. And every brokerage can do that?
Most brokerages have that feature, yeah. It's just called recurring investment.
Can you recommend maybe 2 or 3 brokerage apps?
Yeah, my favorite brokerages are probably Fidelity. That's like the biggest kind of one of the most well capitalized brokerages in the United States. Another one I think that's very beginner friendly that got a lot of hate in 2021 was Robinhood, but they've made a lot of improvements since. You just have to kind of be careful there. It's a little more gamified. So I
And do
feel
they have
like
it automated?
they do have
Yeah.
automated. Yeah, you can automate it. And then some other ones like Schwab is fine. M1 Finance is good too. In general, the bigger the brokerage, usually the better.
So you mentioned those different accounts.
Sure.
You mentioned like brokerage,
Yep.
like
Yep.
general investment, 401k, Roth IRA.
Mm-hmm.
So if a person just starts investing
Mm-hmm.
and they're aiming for like 10 years,
Yeah.
would you start a 401k or would you just put it in a brokerage account? Because 401k, you can only start taking out money when you're like 70 something, right?
Yeah, I believe it's I think 401k. Sorry, I get a lot of the accounts confused sometimes, but I'm pretty sure 401k you can start to take contributions out or sorry, your earnings out at 59.5. But then they start requiring you to take money out around the age of 70.5. I
Yeah,
think that's
well,
required minimum
what's the general
distributions.
because when we started 401k,
Mm-hmm.
and we started only 2 years ago, because
Yeah.
when I was talking to my husband, he's like, why would we just put money there? And like, we're 34, like 33,
Mm-hmm.
we're so active. Why don't we invest in business? Like, why would you invest in 401k? And I have my financial advisor who was like, Marina, you don't understand. Compound interest without
Sure.
tax, that's a write-off for your business. So he's kind of making us contribute every year. But for me, psychology, again, I come from a country where we had so many turmoils where our savings just disappeared. So what would be your general advice? Like, do you start with a general brokerage account or you go straight into tax saving
Yeah,
strategies?
that's a great question. I believe with your audience, which probably a lot of them are non-US based, is my guess, you're going to have a lot of skepticism when it comes to the 401k. That makes total sense. And sometimes it's better to take control of your own destiny and just like take that money and go buy a house with it or buy a rental property with it. And you can tangibly see the money there. I get that too. The reason why the 401k in America is so good is that it's a forced savings mechanism. So it forces people to save that normally wouldn't save. If you're already a great saver, like let's say you save 50% of your income and you are a better active investor or you feel like you can do some business with it, maybe you do that instead. If you need the money in 10 years, like what you just said, then you probably wouldn't invest it in a 401k because
Yeah.
you got to take that money out eventually. And if you put it in a 401k, you're not going to be able to take that money out
But you
for
can
40
borrow
years.
against your 401k or
Yeah, you can
there's
borrow against it. There's
strategies,
some
but
strategies.
yeah.
Yeah. But I would say in general, most people, if they need the money before they retire, brokerage is fine. Yeah, you're going to be taxed on it, but that's better than, let's say, paying penalties because you're withdrawing from your
Yeah,
Roth
because the
or
balance is crazy, like
401k.
10% or
Yeah.
plus
Mm-hmm.
tax. I feel like a lot of people who are watching, they also just moved to the US and they're like starting to realize how complex everything is.
Very complex. Now, the 401k is worth it if your employer gives you the match
Yeah.
because that's just free money.
And also if you have your own business, because that's a write-off.
Yes.
And what I realized, what my CPA told me, once you get your 401k distribution, it goes onto your W-2. So if you're
Oh,
applying for
interesting.
mortgage,
Yeah.
that increases your W-2 income, so it's good for mortgage.
Oh, that's good to know.
That was another key takeaway.
Yeah, that's great. That's awesome.
Cool. Okay. So we talked about saving, etc. What about real estate? What about like, do you rent or?
I currently rent.
Yeah.
Yeah, but in San Francisco, it's a lot cheaper to rent than to buy. So I live in San Francisco, the city.
Is there a general rule? So you said in San Francisco, it's cheaper to
Yeah.
rent. Like, how do you calculate that?
Well, I look at how much I pay in rent and I look at the comparable amount that I would pay in mortgage and what type of house that would afford me. And for the same amount of rent, I would not be able to afford anything nice. It's just like I get maybe like a 1-bedroom condo, and I live currently in a 2-bedroom, 2-bathroom.
So you're
nicer
not
apartment.
following the rule where you live under your means and
No, I'm definitely living under my means for sure. Yeah,
but not too low.
but not too low. Yeah. I mean, I still need space for like my studio, and I realize I just kind of like a nicer place to live. So yeah.
But don't you have FOMO of like missing out on prices rising
Yeah,
here?
I do
Because
here
they
and
double every
there.
10 years, right? Here in the Bay.
Yeah, mostly not San Francisco condo market. That's kind of
Oh,
stayed flat
that's
in the
like a
last 10
crazy
years.
market.
Yeah,
It stayed flat. The
yeah,
prices are so low and nobody wants to,
yeah.
because you can't really rent
If
it
I can
out.
afford something down here and pay, put a good down payment on it, I would probably do that. So down here would be the peninsula,
Yeah.
because real estate tends to appreciate quite well down here.
Yeah. And what I realized, a lot of people who bought here, they pay twice as much in mortgage versus what we pay in rent. But they have this upside when the
Yeah,
property just, gains a couple
appreciates.
million.
Yeah, especially in the Bay Area where that's very, very common. I would say across the country, there are some cities where real estate hasn't appreciated in the last 10 years. And so that's what you kind of have to consider. Like, where do you live? How does the appreciation look historically? Yeah,
If it looks good historically,
might be a good
how
idea. Might
is
be a
it?
good idea. Yeah.
Yeah, is it an indicator that it's probably going to continue growing?
Um, I mean, in the finance world, you always say
Yeah, because it's not a
past
predictor.
performance
Yeah,
is
yeah,
not a predictor of future
yeah.
results. But I mean,
Because I'm always worried, like Hawaii, right? It's grown
yeah,
so crazy in the past 10 years. I'm
yeah,
like, is it going to
exactly.
continue or not?
Yeah, I think those are tougher questions, and those kind of come down to more
Yeah,
personal
yeah, yeah, yeah.
beliefs and decisions with their money. Yeah, with
Have you
people's
ever
money.
considered buying real estate?
Yeah, yeah, definitely.
Have you bought anything, or what's
No,
your plan here?
no, I want to buy something probably the next year or two. So yeah, I'm still planning to, but mortgage rates right now are quite high. So
Yeah.
waiting.
Are you gonna buy something to live in, or you gonna rent it out?
I would buy something to live in, personally. Yeah, I think I thought about renting things out, but I don't really want to be someone's landlord. I think that's what I've realized.
Why not Airbnb? Like all the
I don't want to have to deal with
depreciation
it.
things
I feel like I could just make way more money
with the
focusing on my
stock
main,
market?
or just
Yeah.
focusing on my main business. Yeah,
Oh, interesting.
yeah.
But you can have someone manage it.
I guess I could.
Yeah.
Yeah.
Okay. Okay. Let's
I know
talk
you
about.
have an Airbnb, so I don't know.
No,
We can
like
talk about it
I'm
later.
just trying to understand like other people's
Yeah,
strategies,
yeah,
and I totally see how Airbnb didn't really do anything in terms of like income this year. It's just lost money, and it generated good revenue, but it still went to like covering the mortgage,
yeah.
etc.
Did you spend a lot of time on it?
No.
Okay, well, that's
Well,
good.
I spent some time. I went there
Sure.
filming, and like we bought the furniture, and
Yeah,
we're like decided we had to change the air conditioner, and we had to do the listing, the photo, like everything.
yeah.
But that was cool experience for me.
Okay. As long as you
Yeah.
enjoyed it, yeah, for
Yeah.
sure.
Yeah. Yeah. But not as much as compared to like my business.
Right.
Let's talk about crypto.
Let's do it. I like crypto.
I am so like this year. I'm like, should I buy meme coins?
Maybe you should.
What do you think? Like, what would be advice here?
Okay. My crypto advice from what I'm going to tell you right now is going to be very different from my YouTube channel. On my YouTube channel, my audience hates crypto. I've already tried to talk about Bitcoin. I've tried to talk about Ethereum. People are very anti-Bitcoin, Ethereum on the channel. And so I just tend to shy away from it on the channel. I think my personal opinion is that crypto is one of the best ways to kind of level out wealth in a way. It's almost like a meritocracy. So if you're able to identify really great coins and get in them early, that's like people actually do make a lot of money with that. However, for every one person that makes, let's say, a 20x or a 50x on a crypto coin, you have 99 people losing all their money. And I think that is incredibly difficult. That's the incredibly difficult part about crypto. And with crypto, your greed gets unimaginably high. You get so greedy because you're like, oh, I have a 5x, I want a 10x. And then that's hard to manage emotionally. And if you're buying a lot of crypto, you have to watch it all day because it's 24/7. It never stops. So there are a lot of mental issues, not mental issues, I want to say, but it takes a toll on your mind if you're investing in crypto. However, I have seen people turn a small amount of money into a large amount of money just by buying the right crypto coin. But even knowing the right
And
crypto coin is
retiring at
tough.
20 something.
Exactly.
So have you tried picking meme coins to invest in?
Yes, I
Yeah.
have.
How was it?
Some are great, some are bad.
What?
Net, I'm up,
Yeah.
and I
This
do.
year? You're
Yeah,
doing it now?
yeah.
So how do you find them? Through friends, chats?
Typically through friends chats. Yeah, I would say you have to be kind of plugged into a crypto community of some sort. You can do that by buying, like, let's say you have the most expensive NFT, right? Like back in 2021, it was like a Bored Ape, right? They might have like a little insider group on Discord where you can kind of trade ideas with each other. The longer you're in the crypto space, the more you get to know the people in crypto. Sometimes there's crypto Twitter, so you get to know some of the influencers. Maybe if you know some of the influencers, that's great. If you work in crypto, right?
So it's mostly insider information.
Yeah, I think there is some inside information, but there's also just like keeping a pulse of what's going on in the crypto markets. And you can even make money not being an insider, but you have to keep a pulse on what's going on all the time. And you have to be able to move fast, and you have to be very objective and not get too emotionally like tied into it. That's what's very hard. Because even if you're right, if you're emotionally too invested and let's say you stay in the coin for too long, you could lose all your gains. So
So you track every single day what's going on, and if you see it going down, you just sell.
something like that. I mean, I'm only in like 4 coins right now, but I used to be in like if you're in 10 to 20, it's hard to track everything. But if you're just in 4, then you just check you just check the 4.
What is the platform that you're using for?
Uh,
Or is it a different platform for every?
I have Coinbase, and then I have a Solana wallet on Phantom, and then I have a MetaMask wallet for my Ethereum transactions.
Okay.
So those are
But all
decentralized
of your
exchanges.
coins, yeah, I have MetaMask, I have Coinbase. But I remember when I was trying to play with meme coins in 2021, I had to get on so many exchanges because
Yeah.
they're all so different platforms. They're only launched on this exchange, and you're like, oh, I need to transfer money there and convert it into some weird coin to buy another weird coin.
These days, it's a lot easier. Mostly, it's just on like you're either on the Solana chain or you're on, let's say, Ethereum or Base, which is Coinbase.
So Phantom for Solana, Coinbase.
Yeah, it's not financial advice, but if you're trying to get into it, that's what you would do. But it's very hard. I would say if you're completely new to crypto, you probably won't make money. You kind of have to have a good network of people that you already know. You kind of have to get into it a little bit, or maybe you buy into a community, something like that.
Okay, let's do a simple strategy then. Let's do Bitcoin.
Yeah.
What would be your recommended percentage of the portfolio that goes into Bitcoin?
Of crypto.
Yeah, no, in general.
Oh, if you believe in crypto for the long term, which Bitcoin is the best asset of all those, I'd probably put 3 to 5% of your
3 to
portfolio in
5.
Bitcoin.
Remember how it was 1 to 2%?
It was?
Like 3 or 4 years ago, I'd ask everyone, it would be like 1 to 2%. Now, I think BlackRock raised it from like 2% to 4% in their portfolio, and like suddenly my financial advisor is like, yeah, 5%. Holy cow,
Yeah,
interesting.
5%. I mean, 5%
Then
is
it
not
goes
going to
to
kill you.
10, then it goes to like it's taking over. It's wild seeing this trend, and like people believing in crypto and then suddenly not believing. It's just such a
Well, I think this year was pretty monumental for Bitcoin in particular because of the ETF and also a lot of these institutions adopting it. So I don't think Bitcoin is going to go anywhere. Let's say in 20 years. There was kind of the threat of the quantum computer chip. Did you see that?
no.
The Google released like a
Yeah, I
quantum
saw
chip
that.
like a
Yeah.
couple weeks ago or maybe last week, and that kind of threatened Bitcoin because the whole idea was like,
Oh, because it's take a lot of energy to.
no, the idea was like the chip could just break Bitcoin's encryption really fast.
Oh,
But
it didn't.
no, it's not gonna happen, not yet, or at least I think that was like uh, a fleeting rumor or fleeting news, so that Bitcoin's price reacted a little bit, but then it just went back up.
Okay, so the strategy would be, okay, if it's 5% and you don't want to get on those exchanges, you can just basically buy an ETF through whatever,
Yeah.
like Fidelity,
Yeah,
right?
you can get exposure through an ETF like Fidelity. Yeah, like Fidelity has their own ETF for Bitcoin, and they back it up with Bitcoin. So they buy Bitcoin to back their ETF. Yeah.
That's great.
Yeah.
And if you have, say, $10,000 that you would put into crypto next year,
Okay.
how would you do it by utilizing dollar cost averaging? Is it like $10,000 throughout a year?
Yeah, I'd probably
How
do. I'd
fast?
probably do like $10,000 across a year
Yeah.
because a year is a pretty good time. It's a longer time in
But
crypto.
for crypto, it looks like it's such a long time.
It is a long time.
I would say like for stock market, that sounds okay. But for
Yeah.
crypto, you might like miss on all
You might miss, but crypto could also go down 70%.
Yeah,
In the summer
by
or
summer,
something,
and you'll
and you
have
might be able to get it cheaper. So yeah, I'd
Okay,
say a year
so-
is pretty good.
So will it apply to any amount of money that you have in mind for investing? Would a year be great for dollar cost averaging? Like if somebody
Yeah, in
saved up,
cryptocurrency.
they've been saving, they're like, okay, 2025,
Yeah.
I'm gonna do it. So
Yeah,
a year.
Yeah, I'd say crypto. Yeah,
Like
a year is pretty good.
every 2 weeks throughout a year.
Yeah, why don't you split up your $10,000 divided by 24 equal payments and do it every 2 weeks, or
Mhm.
26 equal payments over 2 weeks.
And just ETF that tracks Bitcoin, because a lot of people talk about like
Mhm.
Ethereum, that it has so much
It
potential.
depends on how deep you want to get into crypto. I mean, if you're just doing Bitcoin, then ETF is fine.
And there are no ETFs for Ethereum, just Bitcoin.
They're pending. I
Okay.
think they're not fully out yet, but
Okay, so
Bitcoin is.
Bitcoin it would be the
Yeah,
easiest.
if you want to buy Ethereum, you have to go on Coinbase or some sort of exchange that's available in your country,
Mm-hmm.
and then buy it through there.
Okay.
Yeah.
All right. Well, we talked about investing.
Okay.
These are all like good decisions. What are the worst decisions people can make and do things with their money in 2025?
Yeah, so I really think it's like think about the things that kill your wealth early on, like before you get to $100,000 in net worth, or let's say a big milestone like 50,000. If you kill your wealth, shopping, doing dumb things, buying a new car you don't really need. Like your case might be different. You might need a new car, and you have the funds that you could afford a new car.
You
But a
know,
lot of
we spent
people,
like 2 hours yesterday with my husband debating if $10,000 is worth saving, buying the new Model Y or the
mm,
old Model Y. And I'm like, with the new, you get the service, you like
yeah,
the
sure,
warranty and all of that. And I'm like, is it worth the headache? But I could invest 10K in Bitcoin. It's just
sure.
so hard to make those decisions.
Those decisions are harder the less money you have, right? Like, actually, they're easier the less money you have, which is like if you don't have that much money, don't spend 10K on the new
Yeah.
Model Y when you can buy the old
How do
Model
you
Y.
make those decisions? Do you come up with an Excel spreadsheet or
Hmm.
and like calculate the
That's harder.
NPV?
No, that's definitely harder to make that decision like off the bat with like you kind of have to know your own personal situation. But your monthly payments or your monthly payment for transportation should not be more than 10 to 15% of your gross income. So all of a sudden, let's say you make 50K a year, if your car payment is like $800 a month, like that's clearly a
And
poor
then there's
financial decision.
insurance, and then
Yeah,
there's
oh
the
yeah,
registration fee, which is
exactly. So I think a lot of people spend too much money on cars. That's typically a wealth killer, especially early on in your wealth building journey. And in America, it's very common, right? That thing, everyone wants a fancy car. And then credit card debt, anything that's slowing down your wealth building. I think that before you get to a milestone number, you should just be as frugal as possible and just get there quicker. Because the quicker you get to that bigger number, the better that money will compound for you, let's say invested.
do you ever sell? Because if you see the market is all-time high, you're kind of tempted to sell and you're like, oh, let's sell, wait for another dip, or use this upside to just finance my lifestyle this year and maybe not work.
Yeah, I mean, okay, so my ideal holding period is typically forever. That's the best holding period. But sometimes, like right now, all my cash is fully deployed into the market.
Mm-hmm.
So I have like,
All of your, what about your,
I have my emergency fund and like my
is it
business
for
bank
business
accounts.
or just
Both.
your personal?
I have
Both.
both cash reserves for business and personal, but all my investing funds are deployed. Typically, I would like to see 10 to 15% of my cash in my portfolio. Like that means of all my funds in my portfolio, I'd like to have 10 or 15% in cash.
Do you feel bad about that cash just in the account when the market
No,
is growing so fast? No.
because what happens if there's a correction or something unexpected happens? Then I'll have some cash to buy that dip up.
But that's in the high yield savings account, or it's just a
That's just in
checking.
my brokerage account. It's probably I think it earns 4.5%
I
on
was
money
still earning.
market,
Okay.
but I want to have extra cash in my portfolio in case there's a dip or a big correction, or I can get some stocks for cheap if something bad happens. Right now, I don't have that cash. It's all fully in the market. So I'd like to sell a little bit of my positions just to replenish that cash pile going into 2025, because right now everything's all-time highs. It's kind of frothy, they call it, which means that it's frothing to the top, which means it's not quite a bubble, but it's like multiples are high right now.
So when
So
are you going to sell this year or next
I
year?
would probably, if I sold, it would probably be before December 31st.
Mm-hmm.
Yeah.
Um, when you said you have this money in your brokerage account and it earns 4.5%, is it a standard thing that brokerage accounts do?
Typically, yeah. Typically, if you're in the right brokerage, your money gets called swept into like a money market fund, which just means it just sits in money market funds, and those money market funds typically pay around 4 to 4.5%.
So if I
Right
transfer,
now,
is
as of
that
right now,
Fidelity? Uh,
that's Infidelity, but I think Schwab probably does it
so
too.
you just transfer your cash there and they automatically start doing that? Or
Yeah, it's
it's
not a high yield though. It's not a high yield account. It's a money market fund, which means that
you
uh,
can take it out anytime.
you can take it out any time.
And with
And
high yield,
but the
there's,
rate is not guaranteed either. It fluctuates a lot too. Yeah.
but with those high yield savings accounts, sometimes they give you a time period, like 6 months, and you can't take your money out before that. Or if you take, there is a penalty or
That
you
would
lose
be
the
a
interest.
certificate of deposit. Yeah.
CD.
A CD.
Yeah.
Yeah.
Wow, that's interesting. 10 to 5% cash.
10 to 15% in cash in your portfolio would be nice. That's me. I'm a little more less risk on,
Mm-hmm.
and I'd like to have some cash opportunities.
So when you sell your stocks, it's only to replenish the cash.
Yeah. Ideally, I just keep all that money in the investing portfolio forever.
Mm-hmm.
I haven't withdrawn from my investing portfolio in like 10 years.
Wow. How often do you make investments that are not part of your plan? So you have
Oh,
automated
yeah.
investments,
Yeah.
but like, is there like a Monday every 2 months when you sit,
No.
or like,
I'd say this year maybe I've made 4 investments that weren't part of the original plan.
can you share?
Yeah, I bought some Coinbase, bought some Nvidia, and I bought some Robinhood.
I feel like everyone bought in.
Coinbase, Nvidia, Robinhood, I bought all those. Like, I bought Robinhood in February and March, and then a lot in June and August. Coinbase, I bought some, I think, in February, and then Nvidia I bought before an earnings report. I remember Nvidia was trading for like 665, and I was like, oh, I want to buy the earnings just for fun, and it like went up a lot. Yeah, but 665 pre-split, so now it's 66.
So it's basically triggered by news. And
It's usually triggered by news, or I read like a quarterly report that I think is very bullish for the company, and then I try to do some financial analysis on like what multiple is that company trading for, and do I think that's undervalued. So that was the case with Robinhood. Like, their user growth was off the charts. They started innovating on all these products, right? They had like 7 products coming out, including a credit card, which I thought would be really great for their business. Their average deposits were going up. They still had a long way to go before they reached total addressable market for assets under custody. Like, Schwab has like $9 trillion under custody, and Robinhood had like 200 billion. So like there's like a long way to go, which I thought was good. And I also thought the price of the stock was beaten down because of the negative sentiment that it had from GameStop. Like, people just forgot about it. This was back in February. And I thought the multiples, I think, on it were pretty low. Like, it was valued, I don't remember the exact multiple, but it was valued lower compared to comparable tech companies.
oh, that's a lot of analyzing.
Yeah,
Do you do that every day?
No, that
No?
was only for that particular company I was very interested in it, and I was reading a lot about their financials and reading a lot of their quarterly reports to make sure that I wanted to invest in that company.
And you do the same for your meme coin strategy, right?
No,
No?
meme coins are kind of
You see, you buy, and that's it?
meme coins are like the less you think about it is typically the better it does.
Okay.
Yeah, I mean, you can do some research on it, but it's not going to have the same, like, you can't evaluate a meme coin like a stock. Like, a stock has fundamentals that it has backing it, versus a meme is like, how good's the meme?
Yeah, yeah.
It's not the same.
When talking about like the individual stock investments,
Mhm.
what is the percentage of your portfolio?
For me,
Yeah.
it's 50-50 now. So it's 50% individual stocks, 50% ETFs. But that's only because all my individual stocks grew so much this year. Like, Nvidia is up like a crazy amount. Ideally, I'd like to have like 60 to 7% ETFs and then the rest in individuals. But right now it's definitely higher individual than
So basically,
ETFs.
the strategy would be just like, ideally, if you want to follow your plan, you would sell some of the individual stocks to put it back
Yes.
and rebalancing.
Or whenever I add money into my portfolio next,
You're
I'll
gonna
just
buy
buy the ETFs
ETFs.
to bring the weight back up. Yeah.
Wow. So it looks like a lot of work for.
It's a lot of work for, I would say, if you're working at like a corporate job, you
Yeah.
just don't want to worry about it. Just do
Yeah, you just
ETFs.
do the split that we talked about at the beginning.
Mhm.
When does it make sense to hire someone to do that? Or does it?
Yeah, no, it does. It definitely makes sense to hire someone to do it if you don't want to pay attention to it and you need more financial guidance than most people. Like, that you don't want to do it yourself and you don't feel like you even want to focus your time on it. Because I'm in it every day, so it's a little different for me. Like, I like it, but if you don't like it, number one, and you probably have like a portfolio of, I'd say around 100K, it starts to make sense. Anything below that, they might charge you too much as
Yeah,
a
and they charge like
percentage.
1% or.
Typical financial advisors will charge you 1% of your portfolio size a year. If you're lower than that, they might have just like a minimum fee, but even 1% is a lot, because 1% will eat into your compound growth over time. However, they can also offer you a lot more advice than just investing. They can help you with estate planning, retirement planning, your kids' education, college
Yeah.
planning, stuff like that. They can do a
So
lot more.
what's your general recommendation?
My opinion is, if you need more than investing advice, you go to a financial advisor. But if you just want investing,
Just do it yourself.
yeah, just do it
do
yourself.
those splits.
Just do a split or do an ETF. Yeah.
Okay, I think my question that's gonna wrap this up will be,
Okay.
how do you stay sane when the market goes down?
I would say I always like to think of what the stock market might look like in 30 years from now. And so, in 30 years from now, it's probably going to be a lot higher than it is right now.
Is that what you say to yourself
Yeah.
when things go down?
Yeah. Yeah. And, drawdowns of 20 to 40% happen. So like your portfolio could be, let's say your portfolio is at $100,000. It could go down to $60,000 in a year.
If we
And that would
remember
suck.
Great Depression, it could go to
Yeah.
almost zero. But basically, it's like a conversation that you have with yourself.
Yeah,
Because
you
when
do.
COVID happened, everyone was like, that's pretty much like the
Mhm.
Great Depression. Okay, we're
Mhm.
going to lose everything. Let's like 2008. And it keeps happening more often than it
Yeah.
used to.
It's tough because I think this goes back to not needing the money, right? If you don't need the money and you can just leave it in the market and not touch it for a long time, then you're going to be able to weather
Then don't touch it.
yeah, you're going to be weather those storms a lot easier. But like, let's say you needed the money next year and all of a sudden it's down 40%, you might be like, all right, I just got to sell because I don't want it to go down more. So that makes you more emotional. I think the longer time horizon you have, the less emotional you naturally are because you don't have to worry too much about it. Because in like 30 years, it'll be like during the 2008 financial crisis, or let's say the COVID crash, if you told yourself in 30 years it'll be a lot higher, you'd just leave your money in. And you didn't have to wait 30 years. You just had to wait a year and then it was a lot higher than it
Yeah.
was. So
Same with crypto, right? When Bitcoin went down so much, people like selling off, panicking. And it's also social media doesn't help. So everyone is
yeah, I think that's the problem, is that investing takes a long time and we live in an age where everything is instant. And you're overloaded with news and information and CNBC and people saying you should sell everything, and
yeah,
not
panicking.
yeah, really you should just invest and just like forget about it for like 15 years and come back and like, oh great.
Yeah, that's the best.
Yeah, that's what you should do, but
Really
most people
hard.
can't do it.
Yeah.
And so it's more fun to track the market because it's like something to do, something to talk about. It's like tracking your sports team.
Exactly. Yeah. Thank
Okay.
you so much,
Thank you
Humphrey.
for
It's
having me.
super useful. Please subscribe to Humphrey's channel.
Subscribe.
He gives advice weekly or several times a
Every
week.
week there's a new video.
Every week.
So
yeah.
put a
He's
link
amazing.
put a link below.
Yes. Thank you so much.
All right. Bye guys.